Being a Tesla investor at this crucial time, you may be scared to put in more money into Tesla stock and to continue buying the dip. In fact, for most investors, it's best to keep their funds or sell their shares rather than put it into a stock market and then watch it drop in value by the day. But you may want to hold on to that one, as big Tesla bull Cathie Wood has something to say to Tesla investors. According to her, investors have incredible fear about the current performance of the stock market, especially with Tesla stock. But on the contrary, this is actually the best time to average into these markets and load up on more shares. Wood describes this as a once-in-a-century opportunity that investors should not miss out on, and you shouldn't either. Hey there, welcome back to Tesla Tomorrow. Cathie Wood's investment management firm ARK Invest has recently been on a dip buying spree, loading up on $88 million worth of Tesla stock in the fourth quarter of last year. The purchases are worth roughly $88 million based on Tesla's average trading levels from the 3rd of October to the 20th of December. And this is not the first time the firm is buying in the dip. Wood disclosed in October via the flagship ARK Innovation ETF that she had bought 66,190 shares of the EV manufacturer. The purchase, which was valued at approximately $13.7 billion based on Tesla's closing price, was the second time she had added to her investment in Tesla this month. Before this, Cathie Wood scooped up a combined 132,213 shares of Tesla, representing a stake worth about $32 million based on the stock's closing price at the time. The transactions came a day after Tesla released its third quarter deliveries, a record 343,000 vehicles, up from 241,300 a year ago. These investments come as Tesla suffers its worst decline since going public over a decade ago. The automaker's stock has been going down the chart and is down over 60% year to date. But this does not seem like it's a problem for Cathie Wood. ARK Innovation ETF, the manager's $6.7 billion flagship fund, has Tesla as its third largest holding, whereas Wood remaining optimistic that Tesla stock is going to perform better in the near future. Why is Cathie Wood buying more Tesla shares then? More details in the video, but before we really get into it, if you like this type of content, don't forget to hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. According to Cathie Wood, there are several factors that can boost Tesla's performance and stock price in the future. The investment experts cited the expected expansion in areas like robotics, AI, and energy as potential catalysts for Tesla's growth, and that other companies may be too focused on these businesses. Cathie Wood believes that there will be a huge market for these ventures, which is going to foster a massive accumulation of revenue for the companies, and she added that all these will happen this year, 2023. Wood confirms that inflation is calming down, and innovation is going to be a part of that equation. However, more than this, Cathie Wood believes that deflation is going to create room for innovation. According to her, good deflation is going to cause a boost in products and services that are associated with innovation. While speaking on the issue, Wood stated that automakers are likely to struggle following the creative self-destruction caused by deflation. Companies that are running their shares in the short term with less investment in innovation may find it difficult to keep up with the coming market challenge. Likewise, automakers with products that will become obsolete will have to sell these shares and commodities at a discounted price or risk incurring a massive loss. Also, in the case of commodity deflation where inventories surpass demand, car companies may have to sell their cars at lower prices to cover the cost of production. Cathie Wood believes that the only companies with a competitive edge on innovation can thrive amidst the expected deflation. She added that the decreased economic growth is going to prompt a shift back into the types of companies that can grow regardless of the economic backdrop. This is not the first time Cathie Wood is revealing her concerns about deflation. In 2021, the stock investor warned that deflation, rather than inflation, will be the largest risk for financial markets and the economy in the coming years. But since Tesla is keen on innovation, this shouldn't be a problem for the automaker. Cathie Wood has said that interest rates can have a significant effect on the rise in Tesla's stock price in the future. According to her, the market is waiting for the FED to lower interest rates, and this may be happening soon. Interest rates are going to be higher than ever recorded in recent history, and these continuous hikes are beginning to take their toll on the economy and the stock market as well. The CEO of Tesla, Elon Musk, has previously blamed the drop in the company's share price on the Federal Reserve, adding that the central bank's aggressive rate hikes to combat near 40-year high inflation have actually deterred investors, and according to him, the market does not control the Federal Reserve, and that is the real problem. In September, the FED raised its benchmark interest rate by 0.75 percentage points, which was a third in a row, bringing the FED's new rate to 3.25%. This interest rate hike has significantly affected stock price and raised fears about what the future holds. Luckily, though, there is a possibility that the FED will be pausing interest rate hikes as inflation seems to be calming down. Market expectations are running high that policymakers will likely approve another rate hike, but this time opting for a 0.5 percentage point or a 50 basis point move. Federal Reserve Governor Christopher Waller recently said that he is open to reducing the level of interest rate increases soon, so long as the economic data cooperates. According to him, recent data have made him more comfortable and prompts him to consider stepping down to a 50 basis point hike. The fears are starting to ease as the FED has admitted to lower inflation rates. Federal Reserve Vice Chair Lael Brainard had said that she was encouraged by the recent US inflation report, which pointed to slower price increases and that the FED saying it would likely soon reduce the size of its interest rate hikes. Cathie Wood is keen on Tesla's ability to scale its energy business, as well as its AI and robotaxi businesses. According to her, the only thing that worked in 2022 was energy, which was up about 50%, and luckily Tesla is growing incredibly in this space. The Tesla energy business significantly expanded during the third quarter of 2022, with record revenues and energy storage deployment. According to the company, Tesla revenues for energy increased 38.6% year over year to $1.117 billion, while the cost of revenues stood at $1.013 billion. If Tesla is able to continue scaling its energy and car businesses, as well as its other ventures, then there's a huge chance it can get even bigger in the future. Although there are perceived problems like inflation and recession, the automaker will pull through. And looking from a different perspective, high inflation is good in the long term because it's going to crush most of the other competition in the industry, although in the short term it could be detrimental. According to Cathie Wood, more people are going to key into electric vehicles and the demand for oil is expected to drop. She believes that the EV market is growing at a tremendous rate. Although it's hard to say what the future holds, one thing is for certain, and that is EVs are the future. These vehicles are likely to become more popular in the future than they are today, and there are a number of events that support this claim. Wood believes that the possible shift to battery-powered automobiles is anticipated to drive the EV market. The market is expected to grow from $287.36 billion in 2021 to $1,318.22 billion in 2028, rising above the 2020 drop caused by the pandemic. Also, the 2022 to 2024 period is said to be the most optimistic period for electric vehicle sales as new EV models will be launched. And going by the latest government policies and support, this is achievable. Cathie Wood is a big fan of the stock market, and her flagship ETS has made investors millions in the past, as she is constantly on the lookout for the next big thing on the board. The CEO recently predicted that Tesla stock is going to hit $4,600 by 2026. This is after she had predicted a $3,000 stock price by 2025. Cathie Wood believes that it's been a tough year for investors. However, she still believes that the best time to invest is when the stocks are in the bear territory, trading at a low price. But what do you think about Cathie Wood buying more shares? Let us know down below, and if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.